Okay. So, are you guys with me? Let me know in the chat if you can hear me. I kind of just been going in for like, I guess, 2 minutes straight, and I'm not sure that you guys even heard any of that. So, today, what we're talking about is okay. Wow. Yeah. So, we're talking about what the government is actually doing to rush forward this adoption of this technology, why it's happening, and what exactly the government is doing in order to get this stuff across the finish line. Over the past few weeks and really the past few months, we've had a lot of different developments taking place. So we want to dive in a little bit to some of those things because a lot of it has kind of just come in and gone, and we haven't really had a whole lot of time to digest it. We had the Clarity Act, excuse me, we had the Genius Act being passed, right? Rushing forward stablecoins. We know a little bit about why that occurred. We know what they're trying to do. They're trying to get demand for U.S. Treasuries back up in a world where that demand is depleting, and governments around the world are rushing to go out and buy gold instead. We want to talk about the Clarity Act coming up and how obviously a lot of the prominent figures, Brian Armstrong among others, saying that the Clarity Act is actually very close to being passed. But what is the Clarity Act? Why is that so important? Why does that actually change things down the line? And then we have, my goodness, I have so many different tabs going on. So we've got the Genius Act, the Clarity Act. We've got this Fed Innovation Conference that just occurred. Okay, so with the Fed Payments Innovation Conference, that kind of also just came in and came out, but he introduced, or excuse me, one of the Fed board members introduced this concept of a skinny master account, allowing crypto companies to have access to the Fed in the way that a normal bank would. Okay, so we can't sleep on that. That's going to be a really big deal. We'll talk about what some of the implications of that are in just a second. And then we're going to talk about the ETFs being passed. Let's talk a little bit about, once again, what is the bigger backdrop as to why this actually has to happen, including the fact that we have massive debt in the United States, right? We have to do something in order to actually address the fact that we're limitlessly, endlessly going further and further into debt with no chance of actually being able to pay it back, right? Not the way that things are going at this particular moment in time. So we're going to dive into all of that, why the US government is so adamant about increasing the adoption of cryptocurrency, and also the fact that everyone is freaking out right now about the markets. So let's dive into some of that first. Let's talk about that because are we in a bear market is what the question is going to be. Let me see what you guys can see because I have no idea what you guys can see. Okay, now I see what you see. I don't know how I got to this though. I'm not sure the best way to go about this. Okay, so first things first, I kind of wanted to dive into, what's happening in the actual markets, right? Because I think that is what has everyone concerned at the moment. So let me dive into that real quick. So, one of the first things that we saw is obviously the market is kind of not in a great place as far as the cryptocurrency market. In fact, I guess we could pull that up first. Bitcoin low and heading lower potentially, right? Everyone's freaking out. We have the 50 EMA, 50-week EMA, I think, got crossed below or whatever and closed below, and people are not liking that. Usually that serves as support, okay, for the entire market throughout this entire bull run, right? That has served as support. That light blue line has been touched, and then it has reacted away from that. It's reacted positively to touching that line. This time around, we've closed down below this blue line, which is the 50-week EMA. Okay, so that's where the market is at right now, like potentially in a bear market, potentially the end of this bull market. And one of the things that I wanted to kind of share was for some perspective around this was posted by Eric Balkahunas, who is, by the way, someone who is fantastic to stay up to date with what's happening in the actual markets themselves, especially with the ETFs, right? He follows the ETFs very closely. He's a senior ETF analyst for Bloomberg. Okay, so he stays on top of all of this stuff. He lets us know what's going on in the crypto ETF market. Now, so the IBIT, which is BlackRock's Bitcoin ETF, actually had the worst day of outflows ever yesterday at about $500 million in outflows. So he said that's an ugly stretch, although the year to date flows still sit at an astronomical plus $25 billion, which is the sixth overall for all ETFs in the world, or excuse me, in the United States. Let's put it that way. Now, uh, all told, he says 3.3 billion in total outflows over the past few months from Bitcoin ETFs, which is about 3.5% of assets under management. Now, I'm not going to try and minimize this because it's not worth minimizing. It's worth understanding that this is actually what's happening, right? We are getting institutions that are actually taking Bitcoin off of their balance sheets regarding using this ETF, right, as the way to do it. So, although that's not the end of the world, it is worth noting that institutions aren't necessarily always moving in and out of markets, right? Like they make positions and they typically are going to very slowly move in and out of them. When it comes to this crypto and these ETFs that we've been seeing because of probably the heightened volatility, we do see a nice amount of inflows and outflows and things changing, right? Um, as we get new information and as the market moves. But once again, what we need to understand here is that we're talking about 3.5% of all of the assets under management. That's not nothing. But when everyone's freaking out talking about like, is the bull run over? Uh, all of the outflows that are happening and the biggest outflows ever from Bitcoin. Well, we have to think about this. We've been continuing to see institutions accumulate more and more and more and more Bitcoin over an entire couple of years now. So yeah, a couple of days now, a couple of weeks of outflows can happen. And what we're seeing is that that actually is not necessarily what it seems to be. It's not that big of a deal compared to what everyone's making it out to be. So I just wanted to share that because it looks really ugly right now. The bull run is over. Bitcoin closed below the 50 week EMA, and that's ugly. Okay, but let's zoom out from all of the stuff that's happening in the markets and talk a little bit more about what has been happening regarding the government, the regulations, and things of that nature. So, first thing first, just the other day, November 18th, yesterday, we had the OCC confirm bank authority to hold certain crypto assets as principal for purposes of paying crypto asset network fees. So I'm sure you guys saw this on Twitter. If you didn't, the OCC, which is the Office of the Comptroller of the Currency, which is a division of the Treasury, okay, of the U.S. Treasury, has come out and they've actually told everyone that, hey, if you're a bank, you are actually allowed to hold assets like Ethereum on your balance sheet and use it to pay fees. You can use that Ethereum to pay fees, and therefore you can hold it on your balance sheet knowing that you're going to have to pay fees in the future. Now, why is this so important? First off, let's continue to read a little bit more about what it is saying. So, the OCC published an interpretive letter confirming that a national bank may pay network fees, sometimes referred to as gas fees, on blockchain networks to facilitate otherwise permissible activities and hold as principal amounts of crypto assets on balance sheet necessary to pay network fees for which the bank anticipates a reasonably foreseeable need. Okay, now that word, that term is going to be interesting. A reasonably foreseeable need is going to be tough to interpret. So this is actually very interesting. So the OCC, right, is one of the major bank regulators. You have the Federal Reserve itself, which is kind of more in the way of like actually implementation of things when it comes to the banking system. Yes, they are a supervisor as well. And then you have the OCC, which is the major regulator, right? So in obviously also with the Treasury and not with the Fed itself. So when it comes to the guidance that the OCC gives, right, is very, very, very specific to the banks themselves. And when they're saying that these banks can actually hold crypto, right, this is massive because this isn't about like a company, for instance, with the SEC, the Securities and Exchange Commission, like MicroStrategy going out and buying Bitcoin and putting it on their balance sheet and that being used as a securities offering. That's not what we're talking about here. We're talking about a bank actually having crypto on their own books, right? Owning and holding this crypto as a way to facilitate banking services. Okay, it's a very, 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 very different thing. Okay, and this interpretation that was just given, we're gonna ignore the reasonably foreseeable need for a second, and we're gonna maybe come back to some of this in a little bit. We also had the other week, the Fed come out and actually do that Payments Innovation Conference. Now, what actually came out of that Payments Innovation Conference, and what does that mean for you and me as holders of cryptocurrency? So let's talk about that, because honestly, this kind of just slipped through the cracks. And if we're not paying enough attention, we're missing one of the biggest ideas that we've seen come out of the Fed in the past ever in crypto. Okay, so let's talk about it. So, Governor, Fed Board Governor Christopher Waller did an opening statement at this Payments Innovation Conference. And in this, one of the things that he talks about AI and crypto and how it's affecting the entire payment system. Guys, it's late for me, so my brain is working a little bit slower. And one of the things that he ended up actually bringing up was allowing, okay, so this comes up several times in the speech, right? He talks about allowing crypto companies to have some sort of a Fed master account. Now, what is a Fed master account? A Fed master account is essentially where banks actually get access to Fed money, right? It's where they are able to hold reserves at the Fed. Okay, and with that, they can earn interest on reserve balances. You'll see that annotated as IORB from time to time. And what this also allows for is for commercial banks to actually settle payments with one another using the Federal Reserve System. So we have payment systems like FedNow, okay, and FedWire, and all these other Fed products that banks are allowed to use, but that crypto companies are not allowed to use. Now, why this matters is because if we get to the point to where, as Mr. Waller has brought up here, he's brought up this idea of giving them a giving crypto companies potentially a skinny master account, which would provide access to the Federal Reserve payment rails while controlling for various risks to the Federal Reserve and payment system. Okay. What this is going to allow for is for crypto companies to be completely natively integrated into the actual payment system and money system in the United States. So that instead of having to have a crypto company using a bank to then get access to their master accounts and their ability to use the financial system, these crypto companies can use the financial systems themselves. And what that means now is that if they have technology, right, that can improve upon the actual natural native use of the payment system in the United States, then that can provide a massive upgrade to the financial system, right? Because there's a few different things. There's like different ways to look at this, right? Because you have companies like Ripple who are out there and applying for a national banking charter. Okay. Now, what has been the case so far is that I think we might have a banking charter. Let me see. Are there any crypto companies with a national banking charter? I think there is at least one. Yeah, so you have Anchorage, right? So you have companies that have a national banking charter, but according to the actual rules that banks have to live by, there's certain things that they just can't do yet. Okay? So even if you are a bank, right? If you're a bank that does crypto and the laws don't allow banks to do the things that they would otherwise be able to do as a crypto company, then it doesn't really matter if they have a banking charter or not. And so what's happening is we've got companies that are applying for banking charters like Ripple, and we have the banking regulators around the United States actually granting access to the Federal Reserve systems and so on and so forth down the line. Now, hasn't happened just yet, right, regarding the Fed master accounts, but that is what they're clearly planning on doing. And what we've seen so far is that the administration and the entire government is coordinating, right, which was a part of an executive order that was actually launched, coordinating to get all of this stuff together and push this stuff out into the world. So now, let me come I haven't been looking at any of the comments so far. What's up, Max Day? Vulcan. Hi, buddy. Welcome back. What's up, Vulcan? Okay, you guys can hear me. Audio's good, loud and clear. Dixie moving funny. Okay. Yep. Okay, cool. Okay, awesome. All right, guys. So those are some of the things that are happening right now. Just from the perspective of the US government trying to allow crypto companies to come in and actually utilize crypto, okay, and putting it on their balance sheet and utilizing it, right? So, this idea of being able to have crypto so that you can utilize it to pay gas fees, right? Paying gas fees as an exchange for my clients, paying gas fees potentially in the activities that I'm doing on chain as a principal, right? If I am a broker dealer and I would like to buy crypto or use decentralized finance protocols, I can hold gas fees in order to do that. So wait a minute. Clearly, there's like these things are going to be done, right? So what's happening here is kind of funny. Is the IRS and I think the OCC have been kind of like doing these funny things where it's like, it's almost like you start with the very like final thing that you need done, right? So, oh, gas fees. Well, we're gonna have to make it clear that you can hold crypto for gas fees. Okay, but what about like, can we do DeFi? Um, yeah, you can also do DeFi. Okay, but like, can we uh, have a non-custodial wallet? Like, yeah, you can have a non-custodial wallet. Okay, cool. And then now all of a sudden you've got everything that you needed in place by the time that final like entry level thing, which is what like banks and crypto companies being able to use FedMaster accounts, right? So now the whole system is plugged in, right? So, anyways, I'm just trying to paint the picture of like what I'm personally kind of seeing and interpreting some of these rules as. So, there's two other things that we have to talk about. One of them being what the CFTC is doing. So, the CFTC in September launched a tokenized collateral and stablecoins initiative. Now, I'll never get over this language because I find it to be absolutely hilarious. Shout out to Caroline at the CFTC for launching this initiative. The thing about this is that, all right, so the CFTC is the major regulator for all of the commodities and futures trading that occurs. We have pretty much two major futures exchanges in the United States. You have the CME, the Chicago Mercantile Exchange, and then you have the NY COMEX, I believe is pretty much the other biggest one. And so with that, you've got all of these different derivative transactions that are taking place in these markets. In fact, these are some of the largest, most liquid markets ever. Only thing that's probably on the same size as these markets is the foreign exchange market. Okay, where banks and institutions will swap currencies for one another, right? So the pound for the dollar and things like that. It's a $5 trillion a day market. When it comes to derivatives, you have different types of derivatives and different types of futures in particular as well. The things that fall under the jurisdiction of the the CFTC are things like futures for commodities transactions. So you've got all of your energy commodities, so oil, gas. Not an energy trader. You've got your agricultural stuff, so wheat, corn, livestock, meaning hogs, beef, all that. All of these types of commodities have futures contracts that are traded for, basically, where these producers of these different types of goods will offset those goods with one another using these futures contracts. So, if I'm a supplier, I'm a farmer, and I want to make sure that I'm able to sell my crop at a certain amount in the future, because I don't know if essentially I will be able to produce more or less. I want to make sure that I can sell at the price that's going to be profitable to me now. I can sell a futures contract on my upcoming yield or whatever, and my upcoming product, and lock in the rate, right, that the market is actually charging for that thing now. Because potentially the price of that could go lower in the future. And in that case, I'd be screwed and potentially be even underwater as a farmer. Now, what the CFTC is doing here is connecting. You've got all of those, right? The actual commodities themselves, but then you also have what are called financial futures. Excuse me, guys, I am a little bit tired and my brain's all over the place. You have financial futures. Financial futures are different from these physically settled futures, because with financial futures, what you have is basically bets around things like interest rates. Okay, the interest rates, you have bonds themselves, you have the NASDAQ and indices, okay, that are traded on futures markets as well. And these are some of the highest traded assets in the futures market. And now these are called derivatives because they are not the underlying thing. And this is the same thing for all of the futures contracts. They're not, you're not actually trading wheat, you're trading a futures contract on the wheat. Okay. And now the reason that this idea of actually having stable coins and cryptocurrency being used as collateral on these systems is so important is because, first off, these are some of the biggest markets in the world. And what you can enable by having stable coins or any sort of programmable money, right, as the being used as collateral for these types of transactions is that it completely changes how you look at, well, obviously what is crypto and what is the value of it. When you can use it as collateral in a transaction like this, it inherently now has a whole new type of value, right? Just to be able to use something as collateral, like my let's say you guys are into watches. If you buy a gold watch and you're like, oh, okay, I'm gonna put this up as collateral to get a loan on a house. If the bank doesn't allow you to use that watch as collateral, if the bank is like, I don't have any way to market this item, I don't have a way to sell it at a fair price, so I don't care about your gold watch. Your gold watch has no value to me. And in that case, then it doesn't have that much value, period, to anyone, if a bank is not going to be willing to take that on as collateral. So when it comes to cryptocurrency, right, being used as collateral in derivatives transactions, which is one of the largest, most liquid markets in the world, okay, in the futures market, then that creates a whole new kind of demand for crypto. And now, what I wanted to really tap on here, because I just find the language around this hilarious, acting chairman Caroline Pham launches tokenized collateral and stablecoins initiative. So, and stablecoins, I believe, is mentioned almost twice. Okay, it wasn't right here, but I just find this to be hilarious because what other type of tokenized collateral are we actually talking about? Okay, and we can see here that the CFTC initiative is an important step toward integrating stablecoins into the heart of regulated financial markets, said by the Jack McDonald, who is the Senior Vice President of Stablecoins at Ripple. Excuse me. Now you have other stablecoin providers that are on a part of this initiative. The CEO of Tether is a part of this initiative. I believe Circle is also a part of this initiative. And another thing for anyone who doesn't know, the president of Circle, not the CEO, but the president is Heath Tarbert, who, by the way, was once actually a chairman of the CFTC. Excuse me. So, anyways, guys, these are all the things that are kind of happening in the background regarding the actual regulations and the laws regarding cryptocurrency. This isn't like just an executive order being signed and then we're sitting back and waiting and trying to see what's going on. No, they're telling us that they're actually moving forward on coordinating all of this. Now, let's talk about the Clarity Act real quick because that's coming down the pipe and we want to know a little bit more about what's in it. So some of the things that I've gathered about the Clarity Act is that obviously you have the SEC and the CFTC have been fighting with each other about like what jurisdiction do each of them have over cryptocurrency? Are cryptocurrency securities, are they commodities, and why, if so? And so the thing about that is that we have clarity around not all assets, okay, but we have a few of them that have been by law, a few of them. We have one asset that by law has been for sure given precedent that it is a commodity. Okay, at least from what I understand, maybe there's other court cases that have made this clear as well. I don't actually know. Definitely in the depth at which, how, and why it is a commodity is probably not being replicated. And that asset is XRP. Now, the reason that I bring that up is because, listen, it's just an actual fact. Like, the court case that was settled was very complex in that In securities law, you have different things that you're talking about when you're talking about a security. You have an asset itself that can be a security, like a stock, but then you can also have a securities transaction. You have transactions and then you have assets. And this is what the entire Ripple case was all about. Was the asset XRP a security, or was the way in which it was offered a security? Okay, so what was, I believe, the actual result of that court case was that the offering that was made was a securities offering, in that when Ripple was selling XRP to institutions over the counter, those were securities transactions that were not registered with the SEC. Whereas the actual asset itself, okay, is not a security. Now, the reason that that can happen is because the actual rules and regulations around a securities transaction are different. And I couldn't give them all to you off the top of my head right now. But uh, yeah, just understand that it's two different things. And that was what this court case helped to settle. Now, with that being the case, we know that XRP as an asset is not a security. And as we have the CFTC and the SEC coming together to define, right, what it is that they're going to have as a role in this digital asset ecosystem, okay, this Clarity Act is going to, the Clarity Act itself doesn't necessarily define all of this, but it tells the SEC and the CFTC to figure it out, right? So, but what will be in the Clarity Act, I'm just reading off of my notes here. You have, it will assign the CFTC as the primary regulator for non-security digital assets. Okay, so the SEC will focus on security-like assets, which are investment contracts. And this Clarity Act will also provide clear rules for exchanges, stablecoins, DeFi, and custodians. And this idea of why this is happening is to reduce the regulatory uncertainty, protect consumers, enable innovation. And when we can know, like, what the definitions even of all of these different things are from the legal perspective, banks, publicly traded companies, all financial institutions will have they'll have an actual playbook for how they can really interact with this technology. A lot of people have been asking me about, like, when is for instance an asset like XRP going to just go crazy? And it's like, you're not going to get the type of use cases that you're looking for until, one, stable coins are fully fleshed out, and the deadlines for when that stuff is actually coming into place are there. So that was, so the Genius Act was signed July 18th, right? But it's not effective until January 18th, 2027, or 120 days after federal rules are issued, with a 3-year grace period for compliance, right? So there's still a lot of time before we actually get to the point to where, like, this technology is 100% ready to go, and floodgates are open. Banks can settle using cryptocurrency and stable coins, and stable coins are being used in securities transactions and derivative transactions. It's like, we're just now starting to have those conversations, but it's very clear that at this point that is the direction that the entire world is heading in. Now, I'm laying out a lot of this stuff, but we still got to talk about, like, but why? Why is all of this actually happening, right? So let me bring up a couple of things that I want you guys to see, because I thought this was really cool. Let me find this for you. If you guys don't follow, what's his name? The Kobesi letter on Twitter, fantastic page. They talk about really cool stuff all the time. Now, they talk about how the U.S. Treasury issuances are skyrocketing. The U.S. government sold another $700 billion almost in treasuries last week across 9 auctions over 3 days. 500 came from T-bills with maturities ranging from 4 to 52 weeks. So that means T-bills are shorter than 1 year treasuries. And I think it's anything less than a year for the treasuries is a T-bill. Now, at the same time, 144 billion in notes and bonds were issued, including a $48 billion in 10-year notes and $28 billion in 30-year bonds. So the total amount of outstanding T bills is now up to a record $7 trillion, doubling since 2020. As a percent of marketable Treasury securities, Treasury bills, short term US Treasuries, right, is what Treasury bills are, have hit nearly 22%, near the highest since 2021. Now, the thing that's happening with US debt in the United States, the US debt has hit $38 trillion this year, earlier this year. And that number continues to rise. As that number, the actual total debt that the United States has, continues to rise, so do the size of the interest payments on which the US government must pay to pay off this debt, right? Now, the problem with that is that it's not actually really happening, because the only thing that the US government can do at this current point in time is borrow more money to pay off more of the debt. And that's what Ray Dalio has called the debt death spiral. So let me actually pull some of that up as well, because I think that is really important to visualize, right? Because it's easy to say it, but we got to visualize it. So, as I said, the US government is continuing to increase its debt to pay off the interest payments and also to pay for all the programs that we continue to create. So, how does the US government increase its debt? Like, what's actually happening? The US Treasury, as we saw over here, is raising money. Okay. Uh, Now, there's a lot of funny business around this. There can be, right, if the Federal Reserve wants to step in and start buying up treasuries as the Treasury puts them up at auctions, right? That's not exactly what we're seeing happen right now. But essentially, otherwise, the Treasury is raising money from individuals and corporations and countries. Okay, that's usually what's happening. Now, as the US Treasury continues to issue these bonds, what has been happening so far, and let's just look at this real time, is that the yields on those bonds continues to rise over time. Okay, we hit a low in the 30-year yield back in 2020 when everything went splat. Now, with these rates continuing to rise, what does that actually mean? It means that borrowers are actually, oh my goodness, excuse me, my brain is fried. Lenders are actually requesting and demanding a higher rate of return for lending money to the US government. Okay, because they are not happy with the rates, right, at which would not make them feel comfortable with whether or not the US government can actually pay back the debt. Okay, whether or not the actual financial health of this entire country is getting better or not. That they're not confident in that. And so because of that, they must get a higher rate of return. It's the same thing for a company. If I do believe that a company has a higher chance of going bankrupt, then guess what I'm going to do? I'm going to say, well, if I'm going to lend you money, then you need to pay me like twice what I'm willing to lend Starbucks, because I know Starbucks is going to pay me back. I know that they're way, way, way less likely to default. But when you have a government that is not being fiscally responsible, meaning that they're just spending more and more money, then without having any way to pay it back, it's like, are you going to keep loaning money to the guy that never paid you back? Like, no. And if you are, you're just going to make, hey, this is messed up. Don't do this to anybody. But you're going to be like, okay, well, fine, I'll give you another dollar, but you're going to have to pay me $10 for that $1. And so then eventually that person's just infinitely in debt to you. And that's kind of what's happening in the United States. Countries are saying, we don't like this. We're going to drop bonds. And when you sell off bonds, that is, right, essentially going to create that higher yield, meaning people are demanding more yield in order to have any demand for those bonds. The yield has to go up to meet any demand. Okay. And once it finds demand, then the rate can come back down again. So these countries are buying gold. They're getting rid of all of their dollars, right? I mean, listen, it's not like they're just dumping every single dollar. They can't do it like that. It'll mess up all of their system, right? Because if I own something and I want to get rid of it and I just drop it, well, If I own a lot of that thing, then it's going to affect the market too. So you see this in crypto all the time, right? You got big whales who go up and buy these meme coins and they can't actually get out of the meme coin. Why can't you get out of the meme coin? Because if you start to dump, the $100 million that you just made in the meme coin, then that's going to decrease the price of the meme coin, and then you actually only have $100,000. Okay, so that's kind of why you're trying to prevent that kind of a thing. Um, it's what these countries are trying to prevent. So let me catch up with you guys a little bit. so so um so anyways, cryptocurrency. You guys want to hear about cryptocurrency? I get it. Look at that. That's ugly. I don't care who you are, where you come from. That's disgusting. I saw some remarks from. Oh, it was really good. I forgot who it was, but the idea was that. Oh, it was from Raoul Pal. And I know a lot of you guys have mixed opinions on him, but let's talk about what he said real quick because um, I do think that what he said was pretty important. So I'll wrap up my other point, which was that the reason the US government is obviously rushing toward getting this legislation in place regarding stablecoins and the rest of all of this digital financial infrastructure is because they know that they are on a sinking ship and they need to change the game. The rules of the game need to change. Otherwise, this isn't going to work out. Okay. So let me go ahead and talk about this real quick. That's definitely not it. Okay. So what we've got is this. My man, Raoul Pal, you guys are so wishy-washy. No, not you guys, but some people out there are very wishy-washy with this guy, but I will stick and ride with my man, Raoul. He said, I wanted to put the current sell-off in perspective. BTC corrected in 2024 around 32%, 2025 around 32%, and right now is around negative 28%. This is normal. You've lived it before. Solana corrected around 45%, negative 67%, and currently 48%. Sui corrected 69% in 2023, down 79% in 2024, 68% in 2025, and down 64% currently. Technicals are flamboyantly oversold. Sentiment is in the poop hole too. Worst I've seen it in this cycle. Now, the one thing that I will argue against here, right, is that although what he said is true that we get these kinds of corrections all the time, the question is when do we get these corrections and where does that actually sit relative to the 50-week EMA as an example, okay? Because in the past, you've actually not really seen the 50-week EMA get violated in the way that we're seeing right now, pretty much ever, right? Throughout the entire history of Bitcoin, that hasn't happened in a bull market. Okay, so the 50-week moving average is always just that. It's just a moving average. It's not end all be all. Arguably, some traders use it, right? Institutional traders use it as a way to gauge things in the market. And if so, then, well, that can move and influence the market. But as you can see, this was 2014. Like, the price of Bitcoin never closed below that blue line in the bull market. And only over here did it finally close through it. And when it did, it continued, right, to fall lower after that. Okay, it gave a fake rally and then it came back down. And so what people are calling for right now is potentially if we get any rally, they're going to fade it or they're going to sell if we get one of those kinds of rallies. Now, let's move forward into that next cycle. Okay, so going into 2017, did we ever touch or we touched that blue line, which is the 50-week moving average once? Okay. And then see, somebody said put it on the yearly chart. Yeah, we'll look at that. We'll look at that. Once again, did we ever close below that 50-week moving average? No, we didn't. We didn't. And once we did, what happened? You had a fake rally and then it rolled back over again. Okay, so 2019 to 2021. So right here, you had this super awkward. I remember this. This was crazy because I thought we were good to go. I remember 2019. I was I was at an internship over the summer and we had this big rally. And I was like, oh my goodness, the world's about to change forever. And it didn't. And this was actually the moment when I did. I took off of university so I could go home and work because I knew we were gonna have that moment. So I went home from university and I just grinded, stacked my paper, and invested into crypto. Now, a lot of you guys already know that about me. Brother, please look at Pulse Chain carefully, seriously, and give it a review. Thanks for your great channel. Street Guru, I appreciate that greatly. We will have to look at it. I mean, okay, so this is actually really fascinating. There's a couple of different projects that keep coming up over and over again. One of them being Pulse Chain, another one of them being another one of them technically being Hex, okay? And then another one of them being, oh my goodness, there's another one that always comes up. And so what you've done here, Street Guru, is you've actually legitimized these requests, okay? Because as a creator, you guys see all the spotty, the spammy bot comments that I get, right? So I never know what's a bot comment and what's not, right? And I mean, rather, hold on. I know when I see obvious bot comments, but I'm never going to assume that some other stuff that I see is not a bot comment too, because I see so many bot comments. And so for you to actually take the time to um, thank you for the super chat, like you've actually legitimized the fact that there are real people out there that are actually wondering about my opinions on Pulse Chain or that care rather about this project. So I will look into it and I'll make sure that we cover it on one of these live streams. We can definitely look at the chart today, but I'll also do my best to actually dig into it and come back to you guys with some stuff. And maybe that'll be one of the live streams we do, just like my favorite crypto projects or just reviewing crypto projects live with you guys. Let me know if that's something that you'd be interested in because we could just sit back and just do that. Okay, so anyways, so you're not in a bull market when you see that kind of movement, right? If you have closed below the 50-week moving average, that bear wasn't necessarily over yet. Now, technically, right here, you did get it closed way through there and not create a new low. Okay, now I don't want to look at it that way because just to not create a new low, just to not go below $15,000, right, is not. I don't think that's what we're trying to accomplish here. So, anyways, let's keep looking. Let's keep looking. Let's keep looking. Did we ever close below the 50-week moving average ever in Bitcoin's history, right? In a bull market? Arguably, that's never happened. Okay, arguably, that's never, ever, ever happened. Now, a lot of people are going to say, oh, well, there's a lot of things that have never happened before. We have on the fundamentals side, that is, we have the White House rushing crypto legislation. We have all of these crypto treasury companies. We've got ETFs being launched. We've got all these different things going on. And I don't disagree with that. But at this point, I'm trying not to let the narratives get away or get ahead of the realities of what is occurring in the market. And what I would say, like for me, when I look at this stuff, I'm not I'm not too quick to make a decision on anything because this is super funky. Like just the whole thing has been funky. I will admit also that the way that Bitcoin has moved throughout the cycle has been very different. I can admit that. Um, but you can't deny that cross below that 50-week moving average. Like that's not just like a little close. That's an aggressive close through that level, and we're gonna get it again this week as well. So someone said to zoom out to the yearly chart. Okay. I definitely like that. I definitely like looking at it from this perspective. No matter where the crypto market goes, Bitcoin will be there. Yeah, I mean, Bitcoin will probably be there. um, so, anyways, if we look at the yearly chart, I mean, I guess what we're looking at just doesn't look as aggressively bad, but there's no other way that I could really interpret that. There's no other way that I could interpret that, my friends. Are you using the logarithmic scale? No, I'm not using the logarithmic scale at the moment. We can try to look at that as well. The moving averages are the moving averages, but we can still look at this. Okay. Okay. And yeah, super ugly, man. We can't see the yearly. can't you see the yearly? Oh my goodness. So let me go back to the yearly real quick because I got y'all looking at my face, but y'all need to see my face. Oh my goodness, why? All right. So this is what's happening here. And I'm going to go back to talking about like the higher macro stuff of what is actually going on in just a second. So we've got, this is what that yearly chart looks like. Okay. Not as aggressively bad, but honestly, I don't like it either way. It's not pretty what's going on here with Bitcoin. And that stands for pretty much a lot of the rest of crypto as well. Very, 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 very ugly stuff all across the board. Now, back to how all of this is happening in the middle of crazy fundamentals. Crazy fundamentals. By the way, if you're enjoying this, hit that like button. Hit that like button for me. Let me know if you're enjoying any of this. Another thing that's been happening in the background regarding the legislation and rapid adoption of this cryptocurrency and blockchain technology is this concept of tokenization. We had was it the Saudi Investment Forum? Gosh. It wasn't. It wasn't. The Abu Dhabi. I forgot what it was. I get so distracted, y'all. We have Larry Fink was at that forum that happened in the Middle East. My goodness. And what they were talking about, what he talked about rather, was that every single asset was being tokenized. Now, as the largest asset manager in the world, coming out and saying that, that's not just somebody just saying some stuff. Okay. He's saying that all assets and markets in the world are going to be tokenized or whatever. Tokenization of everything is coming. Now, what are some of the obvious assets that can be tokenized and what does this mean? Why does this have, like, where does this play into the role of what the US is trying to do with cryptocurrency? You could tokenize real estate and land. Okay. Imagine being able to pay out rents that your tenants of your building, okay, are paying. You could have a company that pays that out on chain automatically. You could also use those payments as like, you could use the asset itself as collateral in digital financial transactions, DeFi transactions. And you could potentially even have a yield bearing token, right? That represents the rents that you're being paid and stake or lend that out to someone else. Now, moving on. Commodities, tokenizing gold, tokenizing oil, tokenizing gas, tokenizing wheat. And then moving on to art and antiquities. You could tokenize art. I think less awesome. Stocks and securities, obviously, currencies, intellectual property. Now, the currencies piece is where we start to get back also closer into like, what is the US government actually doing here? Because one of the things that the tokenization of everything is going to allow is what we were talking about with Caroline Pham and how she's allowing us to have derivatives, have tokenized assets being used as derivatives, right? So let's tie that back in. So now if I have all of these different things that are tokenized, right? Remember, it said tokenized assets and stablecoins and tokenized currency. Okay. Now you can have anything in the world being used as collateral in derivatives transactions over the futures market. Gosh, I got so distracted during that. What does that even mean? When you are doing a transaction in the derivatives market, you have to post up some sort of form of collateral. You'll hear it referred to as margin. Okay. Most of the time in the futures market in particular, that is going to be cash. It's going to be cash. Okay. So if I'm a trader or an investor or whatever, and I want to place a long on wheat. I'm going to put cash into my account, and I'm going to use that cash as collateral for the transaction that I use to go out and buy and or sell wheat contracts. So with that, if I can now come into this and I can all of a sudden use any tokenized asset, and all of these different assets are tokenized, then I have the ability to put way more purchasing power, buying power into these derivatives markets. Now, why does that matter for the United States of America? If you have the ability to tokenize pretty much everything, there's a lot of value. The same way we said, well, if you can use crypto as collateral, right, then the value or the meaning of that crypto is now higher. Well, the same thing for all tokenized instruments. If you can use these instruments as collateral in derivatives transactions, then the entire system becomes more valuable. Now, the United States government benefits from having a stronger financial system because the way that capital markets has been like the moat through which the United States has been built up off in the past, right? So having the strongest, most liquid stocks, for instance, and venture capital, and so on and so forth. That has been the major thing that has supported the investment, at least capital, that comes into the United States. Well, as our debt situation gets worse and worse, where the demand for that debt gets lower and the yield on that debt goes higher, then what the United States has done is they've said, okay, well, let's redefine what it means to have demand for the debt. Because if we can make the demand for the debt be the demand for technology, right, then we've completely changed the equation of what the value is of United States Treasury debt. And that is what the Genius Act enabled. The Genius Act enabled using technology as a proxy to the value of US Treasury bonds. Now, how? How exactly? Okay, so let's break it down. I'm sure you guys already understand this. When you have a law that says that you must back your stable coins one by one with treasuries, then now for anyone who wants to use a stable coin, they now have artificially created demand for US treasuries, for US denominated stable coins. And so the thing about this, and I've explained this a ton, so hopefully if you haven't heard it, hear it again. Countries around the world are trying to drop US government debt, right? They don't want US treasuries. Now, the citizens of those countries might still want US dollars, though. They might still want access to US dollars for many reasons. One being the currency in their local country is much more volatile and inflating away at a higher pace. That's the case oftentimes. Now, in that case, well, I want the thing that's going to be the best at holding my wealth without me having to go through what's happening right now at Bitcoin, where it's down 30, 50% as well. Okay. So if I want to hold my wealth in a way that I don't think is going to at least, go down 30 to 50%, which for some of them, even the currency alone can do that, then I need to hold, well, the only option that I really have is to hold something like a stablecoin for two reasons. One being it's digital and no one can, and it's permissionless. So it's really hard to stop it. This is also wild. The only people that would stop it would be the issuers of the stablecoin. They can stop you from using the stablecoin, right? Usually they're going to do that on behalf of a government agency or entity that's telling them to stop the use of that stablecoin. Well, the US government is totally fine with citizens of other countries using stablecoins because why? Well, now with the Genius Act, that's going to create more demand for US treasuries. And so when you're doing that, you are now allowing these individuals, right, who are simply looking for a technological solution to their problem, really. And money is a technology. So I'm not, as the individual in Venezuela or in Colombia, I'm not necessarily like trying to support America. Like, I don't care about that. What I care about is protecting my wealth that I've built up. And so that is where this demand for U.S. Treasuries can come in based upon just the Genius Act alone. Now, back to the Clarity Act. With the Clarity Act, if we can have clear rules around how cryptocurrency can be used both in the investment landscape and also in the banking landscape, we've got the OCC, the Office of the Controller of the Currency, the Federal Reserve, the SEC, the CFTC, all coming together to provide a framework for how this technology can be used, right? And creating these ways for which crypto companies, right, can plug into the banking system and potentially use their technological solutions to increase the efficiency of the settlement times and so on and so forth within the US payment system. Then what can happen here, what can end up happening here is that the United States builds a new moat for itself through the payment system and not just through the investing and investment landscape, right? And so instead of it just being capital markets itself, right, that becomes the main driver of why capital flows from other parts of the world into America, instead of it being the capital markets, it can become the actual financial, the payments system itself. Because if the United States provides the most efficient payments in the entire world, and all of these payments can be ubiquitously used by anyone everywhere, then the United States will accrue the value that comes from that as well. And that is what I think the major plan is behind what the United States is actually doing to get cryptocurrency adopted. They're trying to reinvent the payment system so that the payment system, right, becomes the thing that is actually the reason why people around the world, not necessarily governments, but their citizens, right, utilize American technology and buy American bonds, okay, and provide that demand that could then completely change the entire landscape. Now, the other side of all this stuff is, Trump talking about wiping out the entire debt with a little crypto check. So now, if we can find different ways to increase the actual demand or value of cryptocurrencies, for instance, by allowing them to be used in those capital markets that we've talked about, and having them being able to be used inside of all the payment system and making that more efficient and effective, then if I'm the United States and I happen to hold or own any of these crypto assets or digital assets that happen to go up in value, then I could completely reset the equation of the actual debt that we have, debt versus liabilities versus your assets. Right now, the United States has plenty of assets on this balance sheet, but the problem has been being able to get any money off of them, right? Like, for instance, the thing that is the most valuable on the United States' balance sheet is land. Okay, and this is what the Trump administration, even in the last term, was so adamant about trying to monetize. This is what, when Scott Bessent earlier this year was talking about monetizing the debt. Excuse me, it's not what he said. He said monetizing the asset side of the U.S. balance sheet was the words that came out of his mouth. And a lot of people thought he was talking about gold, right? But I think the thing that what he was really talking about was not just gold, but land, okay? And actually getting, allowing the oil companies to go out and lease the land from the government so that they could go out and drill more and produce more oil. Okay, leasing that land to these people. Because the thing is that's a lot of the United States' wealth is just land, right? And so, anyways, my point is we need to have, okay, this comes back to that conversation around tokenizing things. Because the problem is as the United States, I can't just sell the land. I mean, that's just not a great idea. I'm not just, because then I don't have that wealth anymore. It's no longer my wealth if I just give the land away. I need to find a way to generate revenue off of that land, or get leverage off of it. And so when you can tokenize land in particular, for instance, you could do a whole lot more with it. You can do it a whole lot more effectively and efficiently as well. So that's one thing. But then the other thing was just once again, if I hold these crypto assets that potentially make payments more effective or even tokenization. Maybe that's what some of these cryptocurrency technologies or distributed ledger technologies are enabling, if they are. And as the United States hold or own any of that, then now the value of that stuff can go up. It's already tokenized, so I can do all kinds of cool, fancy financial stuff with it. Right? I can borrow off of it. I can do all kinds of crazy stuff with it on a global, permissionless scale, potentially even. And now, if I wanted to borrow off of these assets that are tokenized and worth whatever they're worth, I can then use that money to, I guess, pay off the debt. I don't know. Maybe that's crazy. Maybe that's crazy. But those are some of the things that I've been thinking about around like what is the U.S. government actually doing and what is the plan around rushing all of this crypto legislation in place. Now, I'm going to start to talk to the chat a little bit. Chat, it's time to chat. If I missed your comments, you can send them again. Hi, Benny says, since when are you in crypto? 2017. Millman said, whales are the back BTC going to bounce soon and hopefully into an alt season. Yeah, I feel very much so not capable of agreeing or disagreeing with that. Is Zcash a little to catch traction on? I'm not sure what happened with that. I think I'm not sure what happened there. So yeah, by the way, if you are here and you've enjoyed any of this, this is probably the least polished you're going to see me. But I just started this new podcast and it's called Memes in Markets. I'm doing it with Ben Levitt. We're going live every Tuesday and Thursday at 12 p.m. Eastern. And if you have not already, I know a lot of you have, but if you listening have not already, the first link in the description will take you to the Memes and Market podcast and it will allow you to subscribe. We just had a crazy guest on. His name is Salim Ismail, and he is a co-host of the Moonshots podcast with Peter Diamandis. And we talk over there about other things. We talk about, obviously we talk about crypto. We talk about blockchain. We talk about AI and all technology and financial markets and everything around the culture of all of that as well. So if you have not already, go and subscribe to Memes and Markets. It's the first link in the description of this video. I'm super excited about that podcast. We're going to have some crazy guests on. And more than that, we're going to have really cool, interesting conversations with them. And you can join us live and participate in that conversation. Now, what are you guys saying? Do you think the next year's narrative on crypto is crypto staking for the next decade for passive income? I think crypto staking is going to be something that you want to be doing now. Because I personally think that what's going to happen there is that yields are going to get compressed over time because people are going to be doing it. More money is going to be involved in it. And we might see new kinds of DeFi markets that do get more yield, but it'll probably also be stuff that's more risky too. So I've bought 0.01 Bitcoin and still DCAing. Should I go all this tip? My guys, you'll never get any financial advice from me. DCAing is an incredible thing to do though. Uh-oh. I lost my camera, guys. I'm just going to have to let it go too. So you're just going to have to see me in LQ for a little bit. The U.S. government wants to own the BTC and give us dollars, sort of like what they did with gold in the 1930s. Yeah, I mean, that's another thing about this dip right now, guys. It's like Charles Hoskinson came out the other day. I already talked about this, but he was like, if you guys sell, you're selling and giving up on the system that we wanted for ourselves, and so on. Yeah, I mean, you don't want to be Bitcoinless into this new world, and I mean, I won't even say that. You don't want to be cryptoless moving into this new world that we're moving into here with continued hyperinflation, potentially everlasting rising rates, right? Unless there's a problem that actually gets fixed here, and even then, if that problem gets solved, like what is the most likely scenario of how that's actually done? There's a few different things. You have gold and you have crypto. Personally, to me, those are the only two options. Now, someone on the Memes and Markets podcast brought up like the ooh, non-linearity of life and non-binary nature of things, and so those obviously aren't the only two options, but those are the things that I think about. Always fast, never slow. Oh, no, no, no. Amin said, it's all up to your risk tolerance. I'm personally saving 100% in Bitcoin because I believe the world is going to become tokenized and BTC is the iPhone of the crypto world. Bitcoin is the iPhone of the crypto world. Very interesting. Very interesting. What's up, Anthony? Peace and blessings to you. Philip said gold backed, crypto backed dollar. Maybe. Adam said, don't you find it very suspicious that the Zcash headquarters is 1.2 miles away? Oh my goodness, 1.25 miles away from the CIA headquarters in McLean, Virginia. That's suspect, bro. I'm so confused. Yeah, okay, opinions on Zcash. And Amin said, my chat was not financial advice. um, yeah, so, okay, and yeah, we'll talk about self-custody too. So Zcash, like, I don't know what has been going on with that. Like, guys, I put out 2 videos about Zcash, and I am feeling like people who have commented on these things did not listen to either of them. Like, one of the people came in here and started off this stream saying, before I was even live, he was like, if you shill Zcash again, I'm unsubscribing. And I'm like, bro, like, when did I shill Zcash? I didn't. I literally have given you guys both of the. First off, it was a live stream. So if you actually watched the live stream, you'd have heard my actual full thoughts on that. So I appreciate all of you guys for being here right now because we're chatting live about this stuff and you guys are actually seeing the actual full thoughts. But anyways, my opinions on Zcash are that Zcash is a privacy coin, and I'm not a huge proponent or fan of privacy coins. Now, does that mean that I don't think it's going to be successful? Like, no, it doesn't mean that. It's just one of those things that I just personally like. I don't bet on that future. But you know who is though? And let me tell you, he's much better person to listen to than me. His name is, well, I think their names are Tyler and Cameron. Okay, and they're going all in on Zcash. Even I think doing a treasury company with Zcash. Okay, so this part is super fascinating. Let me pull this up for you guys real quick. So the Winklevoss backed Cypherpunk buys $18 million more Zcash, bringing holdings to $150 million. The digital asset treasury firm is sitting on over 100% gains following Zcash's recent rally. This was November 19th at 10 p.m. Wait a minute. Oh, that's my time. I'm like, what? Okay. So Cypherpunk Technologies, the digital asset treasury firm backed by the Winklevi, bought. They're at a total of 233,000 Zcash. So, okay, they disclosed that they purchased this at an average price of $602, boosting its total holdings to 233K, currently worth 150 million. So they had initially invested 50 million. Together, the firm now controls around 1.43% of Zcash's total circulating supply. So, now what Cypherpunk actually is, I'm not 100% sure. Okay, so Cypherpunk has positioned itself as a digital asset treasury company focused on what it calls a censorship-resistant asset at a time when an investor when investor interest in privacy coins appear to be rekindling. Zcash is a privacy-focused cryptocurrency that uses zero-knowledge proofs to shield transaction details. Zcash surged more than 10% over the last 24 hours to $640, outpacing blah, 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 blah. So, anyways, so the Winklevi twins are apparently kind of going in a little bit on this. Now, the way that these people write these headlines is fantastic. I'm not gonna lie. Like, these guys probably invest in a lot of companies. I'll just be honest, right? Like, they invest in a lot of companies. So, uh, yes, whatever some company that they're backing is buying this Bitcoin, but is it really a part? Excuse me, just Zcash. Is it really a part of their? Um, is it really their decision making on that? I don't know if that's really 100% what's occurring. So, what else do I think about Zcash? I think that Zcash. Oh yeah, we talked about it being in right next to the CIA. So listen, if you're going to bet on privacy coins, do you want to bet on the one that's not 2 miles away from the CIA agency's headquarters, or do you want to bet on the one that is 2 miles away from the agency's headquarters? Which one? You know what I mean? I mean, obviously, that's very much so like minimizing the discussion. But the point of it is that with Zcash, you have mechanisms to actually reveal, right, the information when you want to or when it's needed. Privacy first, but inherently also, uh, revealing the information as you need to or as you want to, right? So you can build a system around it where, from what I understand, where you can get the information that's otherwise being obfuscated on something like Monero. So, do you want to bet on the system where, like Monero, where you have no backdoor? And I know that this isn't the technical way of thinking about this. I just understand from the first principles perspective. Or the one, do you want to bet on the one that does have a backdoor? I mean, listen, depends on if you believe in privacy or do you believe in, right, like distributed ledger technology. Do you believe in privacy technology or distributed ledger technology? And you don't have to, it's not a binary thing. You can have both at the same time. But the horse that I have in the race of around all of this stuff, guys, is not like, for me, it's not Bitcoin only. And it's not Zcash only. And it's not Monero only. It's a world where we want to look at like what's going to lead to the adoption of all distributed ledger technology. I care much more about things like interoperability. You'll hear me say it 100,000 times. Those are the things that I care about. Interoperability. That's pretty much the number one thing. Now, because you can make a million bets on this coin, that coin, and the specific consensus mechanism that's being used and whether or not that's superior. And even if the consensus mechanism being used is superior, does that mean that the technology is going to be used? Not necessarily. No, it doesn't. So once again, just because the privacy preserving technology of Monero is better does not mean that it's going to be used more than Zcash will. Okay, and that is the premise of how I'm going to look at whether or not I would want to be invested in something, or if I wanted to be exposed or have that kind of exposure to something. Now, hopefully that tells you my opinion on Zcash. Yeah, we see so much. Somebody had this beautiful comment on one of those two videos where it was like about Zcash, where it was like a lot of us in the crypto space have this inability to reconcile those two different realities. One being that there's a technology that's better at achieving a goal of what we care about, which is privacy. But then there's also the thing that's actually more likely to be utilized because of the darker, more cynical realities of the world that we live in. Like, I think that's where a lot of you guys actually do come to agreement with me, right? Because I mean, this is what my whole channel is really about. It's like, here's how the system works, and here's what we can do about it. Not here's how we're gonna like. Unfortunately, we're not necessarily talking about how to completely fix it, right? That's just not the thing that I'm really locked in on with you guys or just in general. It's like we'll get there, but let's beat the game first, right? Now, let's see. Real one, yes, I did. Okay, Philip said, how do you do DeFi safely? The risk of getting hacked seems way too high. Okay, so Philip, the risk of getting hacked, the risk of you getting hacked, or the risk of the protocol being hacked? The risk of you getting hacked is definitely higher than the protocol getting hacked. And when it comes to you getting hacked, I go over in depth around this stuff in my communities, right? So I released 2140 Finance lately. 2140 is the year that all the Bitcoin will be mined. That's where that number comes from. And we have our little free Discord. Okay, I try to answer questions and stuff that people have in there. And then we have an actual a paid community where you have either the monthly version or you can set up a call with my team to get access to the actual higher level materials where you can get one-on-one guidance and actually get my actual thoughts on how we're doing that stuff in real time. Those links are also in the description. But getting hacked, like honestly, like someone brought up, how do I feel about hardware? I think hardware is one of the ways to protect yourself. Why did I not see that comment anymore? Somebody said comment something about hardware storage, cold storage. So cold storage is a way to make sure that, I mean, to the best of your abilities, right, that your stuff can't be touched. And cold storage can be a physical device, right? So that's usually the way that you're going to do cold storage. Now, we've seen a lot of vulnerabilities with cold storage. If you don't use it in a cold way, especially, right? Very unfortunate situation that happened about a month and a half ago, maybe, where the guy lost $3 million of XRP. So let's talk about that real quick because that hurts my heart. I hate to hear that. But it's preventable, okay, for two things. Obviously, he knows the mistakes that he made, right? He connected it to, he basically made that cold wallet a hot wallet by connecting it to something. And the other major mistake that these are the things that I teach is that you cannot hold all of your digital assets in one place. Period. I don't care whether it's a hardware wallet or if it's an exchange wallet. That part actually doesn't even matter because if you hold all of your digital assets in one place, you have broken the cardinal rule of diversification and you didn't even know it. Because even if you had 100 different cryptos all on your cold wallet, if you lose that cold wallet, if it gets compromised by the actual producer of the cold wallet, right? If your grandma throws it away or puts it in the furnace because she thinks you're playing around with the devil's lettuce or the devil's money, rather. Like, brother, anything can happen. You know what I mean? Obviously, that wouldn't necessarily ruin your situation to just use the physical device, but the point stands in that you never want to have your exposure to your retirement or the things that you're betting your entire life on being in one place. So spread it out. Spread it out because we don't know. My thing was always, we don't know if the government's going to say that cold storage is just illegal because there was a time where that was on the table. That was on the table. This was going through Congress. There were Congress people who put that up as legislation, who wrote that down. Okay. So, anyways, yeah, just diversify your holdings, and if you're going to hold stuff on exchanges, diversify your holdings across different exchanges as well. Now, let me come back to some of the things that you guys were saying. Dr. K. Solos, what are your thoughts on meme coins in the future? Do you think they will disappear or will it be the casino of crypto? I love the question. Ben on Memes and Markets, my co-host over there, he has a different opinion on meme coins and NFTs than I do. My major thesis is always going to be like, I just won't touch that stuff because I don't get it. And that's where Ben and I are just different people, right? He understands culture. He understands like deeply some of the psychology of how people move, how they work, how especially these crypto people move and how they work. Like I'm more just like, okay, Does it do anything? No. But that doesn't mean that it's not valuable. There's a lot of things that aren't physically useful that have value, like art. Now, I'm not saying that all that NFTs are is art, because that's not what it is. But uh, and same thing for meme coins. It's just a matter of, Doge might not necessarily have utility, but it has utility as a cultural instrument. It's a cultural phenomenon, and because of that, we've seen it go up to crazy valuations. Do I think that happens again in the future? I mean, I don't see why it wouldn't happen in the future, but I personally would not spend a second of my time trying to figure that out, because that's just not who I am. Okay, so next. Robert says, Robert Leela says, the government controls the on ramps and off ramps of the KY on the KYC exchanges. Even with a privacy coin, you get frozen out. So let's see, Prism. What's up, Prism? Let me make sure I'm not revealing anything. Prism. So yeah, so listen, you guys, I mean, my second biggest video on this channel is all about that, which is pretty funny in retrospect. Oh, wow, Prism. Y'all buying the dip or waiting for it to go lower, said Prism. Yeah, I mean, I started buying that first time we hit, what was it, like 90? And I just started buying. I didn't go crazy. That first time we dipped below that level, what was the level? That first time that we dipped below that 98K level was when I started placing buys. And honestly, a lot of my altcoins are not doing as bad as even right there. So we'll see how that continues to go. But what up, Prism? I don't think I've necessarily seen you around, but I just looked at your channel. Congrats on all of that. That's really cool. So let's see. Amin said BTC is the iPhone, meaning it's the first mover. It's not the most functional option, but it does a good job at basic functions. When people think mobile, they think iPhone. Think crypto, think BTC. Yeah, I do get that. Prism said, will DCAing protect us from de-dollarization, or should we all just DCA gold? Well, listen, I wouldn't necessarily, I back to the non-binary thing. It's not the same thing, but why not both? You want to prepare for both of those outcomes in my mind. At least that's what I do. Prism said, how much Zcash did you buy? My brother, like, that's another thing, like, zero, right? So I don't know why everybody's saying I'm shilling Zcash. Like, bro, stop. I don't own Zcash. I'm just talking about the narratives. And I know that's not what you said, Prism. I'm just responding to some of that other commentary as well. So I do want to go back because I kind of just skipped your words, Robert, because I know a lot of you people here do get it. So this idea that the government controls the on ramps and off ramps of KYC on the KYC exchanges, even with a privacy coin, you get frozen out. So this is my whole kind of premise around like the privacy thing. Like, listen, you need privacy at a lower level of internet protocol if you really want to maintain your privacy. Like, how does the FBI and the Department of Justice catch all these people that are using Bitcoin transactions? Is because they have access to other data points than their private keys. Right? Like, come on. I don't mean to say it like that, but because you're using some mixing technology that obfuscates the transaction layer of what's occurring, it doesn't mean that the data layer, the actual transport layer of the data and the information from you connecting to that network is private. Now, when it comes to Monero, I don't actually know the intricacies of how it works. So I can't speak on it. I can't speak on Monero in that regard. But either way, you have a project like Deco, DECO. I think we talked about it on Memes and Markets. Once again, if you have not subscribed to Memes and Markets, click that first link in the description and subscribe to the podcast. We're going live every Tuesday and Thursday at 12 p.m. Eastern. I will keep on. That is something that I am shilling. I am shilling Memes and Markets. I'm shilling it all the way. So go and subscribe to that. It's going to be massive. We're having on crazy guests. Now, we talked about on Memes and Markets how Deco being having the ability to have transport layer security, zero knowledge proofs. Okay, so it's on the Zcash episode of Memes and Markets. So you can watch that, but I go through the internet architecture and how when you're essentially like connecting to a website, when you connect to your Wi-Fi first, and your Wi-Fi sends your request to go out and get information from a server, for instance, that layer between, from what I understand, that layer between your router or your internet service and the actual server that you're reaching, right? So Amazon Web Services, a lot of the times, is the server that you're reaching out to. That is the transport layer of the internet. And correct me where I have that a little bit misunderstood. But you want to have security at that level, and even really at the level before you even talk to the internet service provider, because the thing is that the internet service provider also adheres to rules and regulations. And those rules and regulations that they adhere to might involve telling someone what it is that you've been doing on the internet if that information is needed. So you can use a VPN, but your internet service provider, okay, is the one that you need to be worried about. Not just when you leave your router out into the rest of the world. So I'm not a network engineer or anything like that. So you guys can correct me on any of that stuff. Anyways. Dr. K Solo said, in recent news about the SEC dropping crypto from their priority list for 2026, I think is what it was. Well, the way that I looked at that is that I think they've done a lot of what they needed to do, and they're going to continue to. Robert says, the best tech does not mean adoption. Exactly. Robert says, it's how much money can be made. Point blank, period. Hemi Connor said, how do you feel about Ripple's progress and fairly recent acquisitions? Oh, man. Guys, I answered all these questions on Memes and Markets. The acquisitions are massive. I think those are massive. What they're doing is they're wrapping the whole game up, and it ties into all the stuff that we've been talking about. I guess I'm trying not to just be like Ripple XRP show to the moon, because like, look, what they're trying to accomplish is extremely ambitious, and it's going to take way more time than a lot of people are thinking it will. But their acquisition of the Prime brokerage and this G Treasury thing, where they're creating this XRP Treasury company. And I feel like there was one other thing they did. Maybe I'm tripping. Position them to be able to utilize their technology. And then that ties back into, right, this concept of, well, are crypto companies going to get access to Fed master accounts? Is Ripple also going to become a bank as they filed for a national banking charter? And I think they're in like the final stages of that now. And can banks have crypto on their balance sheets or hold crypto in order to pay for gas fees at a reasonable amount or whatever? I see my face on my screen. Okay, cool. Hey, I think that's very promising. Financial Education for Families, cool name, said, no secret, they already showed us what they're doing. Yeah, you're correct about that. Ili Apturo, do you think we're entering a crypto bear market? The data would tell us that we are. The data would tell us that we are. As far as Bitcoin crossing and closing below that 50-week moving average. Okay. And as you can tell, it hurts me to say that. But there's certain things that we cannot fully ignore. And this is one of those things. What apps brokerages do you prefer when investing in crypto? Oof. I don't know if I'm really ready to endorse anybody. I think for people who are older or newer to crypto, I love Caleb and Brown. And you guys know that I have a relationship with them, and I do feel very confident in that, and I do use them myself as well. But that's like if you wanted to have a brokerage um, that you can talk to, which I think is super unique in crypto. So if you guys ever want to join them, there's a link in my channel bio, and that's a great way to uh, just have another exchange that you use. Be on several exchanges, and if you want to have someone that you can talk to, I don't think a lot of you guys need that per se, but for the people who are newer and or not as native with this technology, I think that's a really massive offering. So Caleb Brown's great for that. Let's see. Amin said, great advice on the holdings. Thanks, Keith. Yeah. Thanks for being here. That's a massive thing that I see a lot of people slip up on. A lot of veterans, a lot of people who have sloshed, thrown some crazy money into the space, just leaving all of their stuff in one place. And it's like, yo, don't do that, because hardware storage is the safest way. It's the only way to hold the crypto. Like, we have to get off of this like religious following of ideas, whether that's the things that you hold or it's how you hold them. Like, it does not matter that the exchanges can get hacked if they don't, and you do. You know what I mean? Like, are your security practices actually better than Coinbase's? Like, probably not. Probably not. So, from that perspective, like, uh, you got to diversify that stuff. We all make mistakes. Momo gets money set. Meme coins will never go away, just change forms. There will always be fads and memes and scams. I won't touch them either anymore. Fair enough. Fair enough. Brendan Roy said, would you look up and read what Jackson Palmer, Dogecoin creator, said about crypto industry and why he left it? Dang, I feel like I remember hearing about that, but I haven't read it. Jackson Palmer. Palmer. Wow, this is in 2015 though. So Dogecoin founder exits crypto community citing toxic culture. You guys can see my screen. Okay. He indicates his leave from absence from the crypto community includes a separation with micropayments project as well. What else we got? Dogecoin founder, Adobe senior manager has announced he's taking extended leave. He called it toxic. Used the occasion to blast the aspects of the industry. Let's see if we can find what he said. Ah, dang, that sucks. Okay. He suggested that the industry is in the midst of a period of stagnation due to ideologies of individuals it is attracting, as well as what he characterized as the poor quality of startups founded by new participants in the space. All in all, crypto's currency space increasingly feels like a bunch of white libertarian bros sitting around hoping to get rich and coming up with half-baked buzzword filled business ideas which often fail in an effort to try to do so, to get rich. He went on to suggest the amount of venture capital in the space, which hit record volume in Q1 2015, that's crazy. What a different era, was playing a role by increasing the amount of anger fueled attacks. The amount of venture capital was playing a role by increasing the amount of anger fueled attacks. I don't have time for it anymore. This is interesting. I feel like I remember seeing something about this, but 2015 means that it happened before I was even around, which means also obviously this happened before 2021 when Dogecoin blew up. So I hope he didn't sell it just because he quit. You know what I mean? If you know what I mean. Um, he said, these are his words, that the community is very white, male dominated, and there are a lot of anarcho libertarian beliefs caught up in there, which I don't really agree with. The comments suggest that despite the influx of new participants into the ecosystem as well as Dogecoin's success, Palmer believes these individuals have been turned off by activities of those in the space. Well, that's definitely real. I mean, a lot of people get turned off by the people that are in crypto and the crazy narratives that they talk about. He said, I have yet to see a Bitcoin business receive VC funding that has a provable business model, i.e., one that generates profit outside of exchanges and merchant services who simply take a slice of their customers' business. He called it a hotbed for scams. He also expressed an overall fatigue at stories indicating that people have lost money. In tweets, he further expressed his love of the traditional payment service Venmo, as well as for the ecosystem as a whole, suggesting he does still see long-term value in the underlying technology. Those charges merchants incur on traditional credit card payments, they exist for a reason, and that's insurance against fraud protection. He continued, adding, I like the idea of being able to reverse charges if my bank account is ever compromised, personally. Facts. Okay, so yeah, that was a cool little trip down memory lane here. I guess not even memory lane, but just the past. Um, so what did you want me to take away from that? Or what did you take away from that? To Brendan Roy, who suggested that. Okay. Moo Cow said, how often do you day trade? Maybe once a week. It's more just honestly like because of my busyness, but usually it would be 2 to 3 times a week max. And I say 2 to 3, 2 max. Momo gets money. I've been buying the dip since last week. Nebius, BMNR, CleanSpark, Hood. Word, man. You know, you want to buy at a premium or you want to buy at a discount? I think Ben said on Memes and Markets, he was like, everyone wants to buy the iPhone on Black Friday. Hey, yo, it's almost Black Friday. Johnny J, I'm not sure about that. I'd have to look at that stuff. Oh, a bunch of deleted messages. Momo Gets Money said, privacy coins only matter for disciplined criminals, not regular people. Oof. Solo Dolo said, try that link. I don't know what that's about. Shrek said, one more 50% bear would be nice. Robert said, there will be a move up for alts end of spring, but many more crypto projects consolidations were out of business. Oof, I can see it. David said, Keith, do you think it is a good time to buy XRP? I shouldn't even have read that out, but I have to address the fact that, guys, that's not the kind of question to ask. At least that's not the kind of question that I'm going to answer. Good time to buy dip for XRP, BTC, ETH. Of course, that's the exact next comment. No way. Robert says, majority of cryptos are 1 cent or less and are just soft forks, copies of other cryptos. Now that's a real fact. Oh man, there's so much absolute garbage out there. There's so much garbage out there, and it wasn't always like that. But here we are. Germond Dash Jr. said, go ahead and do more of the Bitcoin thing. Interesting. I surely wouldn't tell anybody what to do. Right about now, that's for sure. Fosfit said you don't need to invest in Zcash to use it. Even 20 years from now, you can buy in, then use it to transfer money. Buying a utility tool and holding it makes no sense. Okay, but but what am I using it for? Why am I using Zcash, Fosfit? Johan said, "Can you repeat that? I just joined. I don't know what to repeat, my friend. I've been on here for an hour and 43 minutes, so I'm not sure which part of that you want me to repeat." SVG said, "It's a good time. Just hold for a decade plus." He's not lying, right? Sedembrino, what's your opinion on the current state of the market? Okay, I guess that's probably what you're also saying. My opinion on the current state of the market is that it looks very ugly. You know who I watch? I sent this to my group the other day. I watch a guy named Jordan Cameron. Shout out to Jordan Cameron. Um, and he has actually been saying the same thing over and over and over again for like, I don't know, maybe 8+ months. And when Bitcoin crossed below that 50-week moving average, he said, "I'm out." I'm just gonna tell you guys what I'm seeing. And I definitely respect his. I just respected the way he stuck to what he was saying, and people would come back and they'd say, "Oh, like you keep saying the same thing over and over again," like da da da. And he was like, "Yep, that's the point." And now he changed his mind, and people are livid. they're livid that he actually had something new to say. Let's see. D-Man said, "Do you believe in never selling and borrowing against crypto?" I think that totally depends on who you are. I think a lot of people think that sounds great, but don't know who they are or where they're at. Phosphate said privacy. Okay, but so the thing was we were asking about why are we using Zcash? We're using Zcash for privacy. Who are you talking to? And what are y'all talking about? Right? Is my question. Because like I really truly, and I put this out in that follow-up Zcash episode, which was just an excerpt from the same live stream. Uh and maybe I added these comments, I don't even remember now, but I said like privacy really only exists on a spectrum in my eyes. Like what is like in today's world, like what is privacy? I think let's actually just look at the definition of privacy and what it says in the dictionary at least. The state or condition of being free from being observed or disturbed by other people. Now that's an interesting one because it says by other people, and I think that that's actually significant because I think that the world that we live in today might have some levels of privacy from other people, but I don't know that you have privacy from systems, right? Like probably also depends on where you live in the world and the government around you and the institutions around you. David said, "What do you think about the November 22nd ISO 20022 update and how it will affect cryptos that work with ISO 20022?" I think it has no impact. I think it has zero impact. And like, let's let November 22nd come and them not delay again. Because they've done that since like 2015 or something crazy like that. It's been being delayed. But I don't know. I don't know. I don't think it's going to have any impact personally, right? That's just it's a standard. It's a standard implementation, which does matter, by the way. That does matter. But does that matter for crypto? I don't know. Crypto is just an option, right, of what you can do with that standard. But it doesn't mean that I have to use that crypto in that standard. We talked about that on Memes and Markets. What are your thoughts ahead of Nvidia earnings report tonight? Yeah, I haven't been following any of that. I don't follow individual stocks, guys. I'm going to be honest. I don't. Phosphate said, "Oh man, now I got to defend my statement, but I don't know what I'm talking about." Me neither, bro. It's all good. That's what this is all about. So Robert Leela said, and retail thinks there isn't a backdoor code built into Zcash. LMAO. Yeah, I don't know. Listen, I think the premise of Zcash is that there's some level of that, right? Uh, from what I understand, but hey, I don't know what's actually understood. And yeah, guys, so Telcoin sending. Telcoin is kind of sending. Interesting. Definitely want to watch for stuff like that. If you start seeing altcoins just like pop, kind of like how Zcash did, um, like what's happening with Bitcoin could be a major manipulation. So if we start seeing like coins actually pop, like making new all-time highs kind of pops, like Zcash just did, then just be prepared for this to not be over just yet. Setim Brino said, but the systems are operated from people or managed. Right. I mean, uh, I think you can find ways to leave people out of the equation. I think artificial intelligence will make that more possible. Artificial intelligence, zero knowledge proofs, transport layer security, and oracleization of data will make it possible to have systems that know things that humans don't at scale. By the way, like important things. Um, and 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 potentially, depending upon what happens with artificial intelligence, those systems won't actually be managed or operated by people either. Just saying. Just saying. It might be created initially by someone who, like, gives the thing the prompt, right, to go and build that, but it might just do it and it doesn't tell anyone how it's doing it or what's being done in particular. It's just doing it. Now, maybe that's a little bit far stretched, but the crazy thing is, like, I think we're stepping into a world like that in the next 5 years where like machines do things that we don't know about, honestly. So Phosphate was defending his point. He said, right now you can send $20 with it at $600 per token. Even if it's $800 in the future, you haven't missed out. But you can still send your $20. You don't need to rush to buy now. Right now you can send $20 with it at $600 per token. Even if it's $800, you haven't missed out. You still send your $20. Excuse me, I'm not sure what your point was there. Dr. K. Solo said, what is the impact of the Clarity Act? I think we went over that. Maybe you weren't here, but the major thing is just that it's going to allow for crypto companies to have and banks and investment firms, everybody to have clarity, no pun intended, on what the rules are around digital assets. And now it's not necessarily going to just like be these are the rules. I think there's still going to need to be interpretations from the SEC and the CFTC. And that's why I think they're getting out ahead of that and creating clarity now. Right? Although, I mean, it seems like the Clarity Act will be passed pretty soon. So even then it'll just be taken care of. Are you guys looking at me on my screen again? You're looking at me. Okay, cool. Clarity could come on December 17th. Yeah, it's actually coming up pretty fast. SVG said, I'm tired of hearing about the AI bubble. What about the CVID bubble? Yeah, I mean, my whole thing has just been like, yeah, what about what about the '09 bubble? Like, what about the bubble that we've had ever since '09? What about the bubble? You know what I mean? Like what about the fact that the market never actually properly popped? And every time we get close to that event, what do we get? We get like massive money printing, we get support, we get bailouts, every single time. '09 was really like the stake in the ground. Like we're not gonna let the markets fall and the system break. So, uh, Bigfoot Stepper says machines already do things we don't know about. There you go. Mr. Dub said, just getting in. There's a Clarity Act and another bill coming for early 2026, or is it the same bill? I think that might be the same bill. I don't know. Maybe I'm tripping. I think there was also the Anti CBDC Act. Maybe that's what you're talking about. Bigfoot Stepper said your car alarm, every device you use, your car engine, etc. Yeah, I mean, I think the thing that we were trying to define was like machines that also are not like hmm, potentially created by people or operated and managed by people was what I think someone else said in particular. Which in that case, I mean, your alarms aren't managed by other people, but like uh, we were kind of talking about like a concept of we're trying to define privacy is what it was all about, I think, and we were saying like um, what I was trying to say is like if you have a system where oh my goodness, where people don't know what the output is of the system, then no, if they don't know what the input is, right, and the system just does what you need it to do, then the system could know information that an individual doesn't. And so we were talking about privacy, like being on a spectrum. And in my mind, I'm thinking, well, oh, and we looked at the definition of privacy. And the definition of privacy is the state or condition of being free from being observed or disturbed by other people. And I was like, oh, well, technically, what if that means that systems can know things and therefore you still have privacy if the system knows it and not a person. Anyways, I'm curious what you think of this. Social interest in Bitcoin is very low relative to where we are in the cycle. Personally, I think the president is terrible for crypto sentiment, even with the Genius Act. I think that yeah, I mean the sentiment has been absolutely horrific. It's been horrific this whole time, and rather like we never got like that mainstream kind of push. I don't know if that's just going to be what it is or what, because maybe like the people who are going to be in this are in it, and I think that's a real reality that's potential. Because like the people that I still hear from on crypto, like the younger people might be skeptics and eventually figure it out, but like the older people, like they're just not going to listen. Uh, Bigfoot Stepper said this is a bubble being made since 19 or excuse me since 1865. I don't know what happened in 1865. I know we were having a lot of bank failures back then too. Uh, Bigfoot Stepper said, if people can't keep jobs, we are screwed. Robert said, exactly. The U.S. government stopped allowing normal recessionary cycles since '08. Yeah, I mean, at the least, right? That was probably the most like in your face. We're gonna privately support all the companies. We're gonna buy up Ginnie Mae. It's now state owned. Ginnie Mae, Fannie Mae, whatever, and like they went all the way in right there. Will you attend NFT Paris 2026? What do you think about an event like this? I bet Ben would go to something like that. No, I don't know. I'm honestly just saying some stuff. I wouldn't be against it. I think they'd have to, you know, at this point, I'd love for them to, invite me there. Be happy to share my completely negative thesis on NFTs. No, I'm just kidding. Mr. Dub said, no, I heard the Senate are working on a market structure bill and should be signed by early 2026. I mean, Clarity Act is a market structure bill, but maybe there's something else going on. I don't know. Phosphate says, does the public have access to the Clarity Act's PDF? Other government proposals I've been able to find and read, but not the Clarity Act. I hear reports on it and what it does, but I'm unable to read it myself. Interesting. Let me see. I mean, however you typically find that stuff, I think you should be able to find it. And just for instance, for everyone, what I did was I went to Congress.gov. Well, I really didn't even go there. I just typed it into Google. The Clarity Act from Congress, Congress.gov. Uh, this is the original one, I think. Yeah, this is the one that passed the House, right? So I can see that here. So what do? I go to text. And now I can see the text, HR 3633. Starts to tell me what the act is. All right, guys, it's late where I'm at. And I got to get up tomorrow and get after this stuff. So let me see what we got. The oracles will probably explode in value after RWAs become popular. That's what I'm stacking now. Well, I don't know if that order makes. Hold on. Yeah, I mean, you can have RWAs without oracles, but they become way less. I think you need oracles to get the real value out of RWAs. But that idea right there is, I love it. Period. Uh, Phosphate said, "I'd like to know the precise rhetoric in the bill." Well, I mean, it's there. Phosphate said, "Oh, he said, OMG, finally, thank you. Yeah, cool, cool." Uh, Kitsy Ghost, do you think the crypto cycle is topped? I think that Bitcoin crossing and holding below that 50-week moving average is uh, not a good look. All right, gonna head out. Thanks, kids. All, yeah, thank you guys. And thank you to everybody here. If you haven't already, be sure to like this. And if you're new here, subscribe. And more than anything, you don't even have to subscribe here. I want you to subscribe to Memes and Markets. It's the first link in the description down below. This show is going to be way more massive than you think it is. I'm telling you right now. This is the one thing that I've had the most conviction in my entire life, other than like some crypto projects around interoperability. Other than that, this is one of the things that I'm the most excited about, most convicted about, and the amount of the crazy, rather, types of guests that we're going to have are going to blow your mind. So be sure to subscribe to Memes and Markets. It's the first link in the description. We go live. Come see us live. Don't just subscribe. Come and show up live every Tuesday and Thursday at 12 p.m. Eastern. We're going to chat with you there and have cool guests. So other than that, appreciate you guys for rocking with me. We will continue to do this kind of stuff, and I will chat with you very, very soon. Cool videos coming out this week as well. But until then, peace out.